Hey, Ivan from the EV Stock Channel here, and in this episode we're looking at China's EV market, covering Tesla, EV sales, and collapsing ICE sales, which could have some major repercussions. But before we begin, thank you to all the Patreons that make these episodes possible, and as always, all content is my opinion only and not financial advice. So let's get started by looking at Tesla's production figures, where we can see that Tesla's upper production figures are topping out at around 88,000 when things are running smoothly. And what I mean by that is when there's no forced factory shutdowns or Chinese New Year holidays, which can reduce production numbers for the month. And if we extrapolate these numbers over the course of a year, I would assume that about an average production month would be about 83,000 vehicles, and that comes out to a quarterly run rate of around 250,000 vehicles, or about 1 million in annual production. However, I wouldn't put it past Tesla to find a way to eke out more production from the Shanghai plant, but I wouldn't be expecting to see too many more changes until new models get released. In the next chart, we can see Tesla's export from China starting to slowly stabilize as Tesla tries to flatten the delivery wave. And as we can see, December and March are the final months of the quarter, and exports have been significantly higher compared to any final month since Giga Shanghai started production. Next up, here are Tesla's deliveries in China, where we can see that Tesla had a record quarter in Q1, which means no slowdown in China for Tesla. I mean, Tesla's made it clear they're going to dynamically change prices to ensure they sell through their production. So if that means prices will need to come down for an extended period of time, so be it. Tesla's chasing deliveries and volume growth over margins. And we're seeing that play out in the Chinese market. In terms of which models are doing best in China, the Model Y comes in first place, and it's pretty much Tesla and BYD that are dominating the EV market, making up 5 of the top 7 models. But the real battle in China is EVs versus internal combustion engines, and this is where things start to get really interesting, as in March, more than 1/3 of all vehicles sold in China were electric. And to follow on, there's a looming crisis brewing in China as hundreds of thousands of unsold polluting gas-powered vehicles may be rendered unsellable due to the incoming emission rules. I'm seeing reports that Chinese dealerships in response are decimating prices of their internal combustion powered vehicles by as much as 40%. The following clip seems to show how bad it seems to be getting.
These used car dealers have taken a hammer and smashed their overpriced second-hand cars because new cars on the market are cheaper than second-hand cars. So even though they continue to reduce the selling point, no one is interested. Just like the COVID-19 virus, an unprecedented price war recently broke out in China's car sales industry. Some car models have been reduced by nearly 50%, and it's not just the bottom or mid-tier brands, but also includes the top-tier brands, including BMW, Mercedes-Benz, and Audi. For some dealers, the massive price cut will allow them to clear their stock, but the low prices would undoubtedly make it difficult to make a profit. For second-hand car dealers, it is an almost fatal blow. The most significant impact is from the price reductions of new energy vehicles, starting with Tesla cars, which has put a lot of pressure on fuel cars. The last reason perhaps is related to the Chinese policy of the implementation of the national 6B emission standard at the end of June 2023, which means national 6A standard fuel vehicles will not be licensed from July 1st, forcing some fuel vehicles to be liquidated.
So in summary, Tesla's production from China seems to be stabilizing at around 1 million vehicles produced per year, and Tesla and BYD are dominating the Chinese EV market. Meanwhile, Tesla's price cuts along with Chinese government new emission rules are only accelerating the demise of internal combustion powered vehicle sales in China. The question is, how will legacy auto cope with reduced sales in China as EV penetration soon hits 50%? Things are going to be pretty interesting, so stay tuned for more content on this topic. And on a final point, I'll be soon releasing the next episode of the Rise of Tesla documentary series, part 4 of year 2022. So till then, have a great day and I'll see you soon.